everybody, it's Christian from Serene Education. Going to be doing the 4 majors in this update for the 17th to the 22nd of May 2015. So going into the 3rd week of May 2015. Going to be looking at the 4 majors, starting with the euro against US dollar. Let's have a look and see what's happened the prior week to give us an idea of what you should be looking for going into the forthcoming week. So let's just pan down. You can see I've got my monthly pivot levels on here. Vitally important to have a look at the monthly pivots. These pivot levels are the open, high, low, close struck through an algorithm to give us the pivots R1, R2, R3, S1, S2, S3, and looking to those levels to look for potential trade setups to those levels as potential targets for the coming weeks ahead. So straight away, looking at the indicator box, you can see that the long-term sentiment is still on a negativity. Having said that, though, we're starting to see a lot of bullish sentiment creeping into this, particularly on the daily, the 4-hour, but most importantly now, you'll notice that we're getting a lot more positive data coming through on the weekly. And you'll notice that we haven't seen any new lows since March. In fact, we saw price ranging through March going into April, but subsequently through the mid part of April onwards, we've seen price moving to the upside. Candlesticks, however, still negative, but you'll notice that price for the first time in the best part of almost a year now, you'll see that price action is actually closed higher than the 20-period moving average on our weekly time frame. So positiveness coming in, creeping in, a lot of positive data creeping in on our smaller time frames. Notice that the MA here, which represents the 200-period moving average, on our 5, 15, 30-minute, hourly, 4-hour, is below price, so supporting price. And the RMO is also doing exactly that. So the RMO and the MA, institution moving average, working together collectively on those time frames, so telling us we should be looking for definite continuation to the upside on our shorter term time frames. So if that's the case, you'll notice that price action is trading above the monthly pivot level, which tells us we should be looking for further bias to the upside, and we have seen that. However, saying that, price is now, going into the end of last week, now moved into the monthly R1 level, which happens to be a price support and resistance in the past. She's failed to close higher than that. So the objective this week is to see economic data that's then going to continue to push euro higher and then to keep influencing on US negativity. That's what we need to see this week. So look at the fundamental data to see if there's anything out there that's actually going to back up price action moving further to the upside. Having said that, when we drop down to the daily time frame, you can see that everything's in our favor on this particular template. The blue arrow candlesticks are positive, RMO is above, and the OSMO, which is the MACD, is also above. So our 4 requirements are in order. Having said that, we need to see a continuation. Any trend, we need to see a continuation of trend. In this case, on our daily, you can see swing high, swing high, swing high, swing high. So now, to see any further progression or opportunity to the upside, we need to see price action this week making new highs. So Monday, Tuesday, Wednesday, Thursday, Friday of this coming week, we need to see making new highs, closing higher than Friday's close, and that would then give us an opportunity to trade higher towards the institution moving average on our daily, but also to the monthly R2 level. And we're looking in excess here of roughly 260 odd pips. Not going to get all of it, but there's going to be enough on there if and when we get a signal to the upside. Failure to see price making new highs this week, i.e. closing higher than last week's high to start with on any daily candles, would then see a consolidation with a potential for a pullback. And if we do see a pullback, we could be looking back towards these levels over here at the 1129, which is the price support and resistance level or consolidation level. So thereabouts. Okay, so clearly we are looking for positiveness, and we're starting to see a lot of positive coming through. Then we need to see price trading above this R1 level, which is the 114786 level, and then target the R2 level here, the monthly R2, which is in excess of 260 odd pips to the upside. Moving on to sterling on the weekly, here again very similar to what it's doing on its European counterpart. You can see that the intermediate trade, the long-term trend on this particular pair, a lot of negativity since July of 2014. In fact, you'll notice that the 20-period moving average acting as a clear support level here, the moving average in yellow. However, saying that, you can see over the past 3 weeks, in fact, we've actually seen price breaking above the 20-period moving average, and we've seen positive to the upside. Having said that, price has now moved from the monthly pivot level, which would telling us we should be looking for bullish sentiment, has now moved to our first target, which is the R1 level. So, imperative, like it's done with this European counterpart, is to look for price now to maintain above the R1 to then target aggressively towards the R2. But saying that, between the R1 and the R2, you can see that on our weekly time frame we have both the 50 period and the institution moving average in the way. So clearly 15878 and change is where price needs to be trading above to clearly give you a genuine continuation of trend to the upside. Looking at the indicator box, you can see the monthly pivot, trend is still one of negativity. A lot of red, and the R square is complementing that. However, you'll notice that the weekly and the daily are blue. And it's primarily because we haven't seen any new lows. We haven't seen new lows since the latter part of March going into April. And if we are to see any new lows, then we need to see price making new swing lows. Currently, on the daily, you can see that price action, get a buy signal, price action has not been making new lows. In fact, she's actually making new swing highs, swing high, swing high, swing high, swing high. Hence the reason why the candlesticks are positive, hence why the RMO is above the zero level, which is a positive sign, hence the reason why the MACD is above the zero level, which is a positive sign. Therefore, we should be looking for bias to the upside. Notice the R1 price actually traded higher on Wednesday. Thursday we saw a slight pullback, and Friday we saw a pullback, but still failing to close lower than the R1 level. So this, as long as price uses this R1 level as a support level, then we should be looking for a continuation. Breakout, pullback, and continuation, and that continuation will take us back up towards that R2 level, which I mentioned to you is in excess of 360 odd pips to the upside. So clearly this week, looking for a bullish daily candle close higher with momentum to tell us we should be looking for a recontinuation of the 5-week sentiment, which is to the upside. Okay, very important. US dollar Swiss franc. If we saw euro US dollar positiveness, we should be looking for US dollar Swiss franc negativity. And if we look at the weekly time frame, you'll notice that prices failed to make any new highs since the end of 2014, and going into, you can see we had a major pullback. However, we failed to see any new highs. Once we saw the pullback, we've seen nothing but negativity over the past 3 months or so. That's dragged price to the downside because of all the negative US data we've seen. And subsequently, you can see price is now trading below the 20, the 50 in the institution, but she's come to find support now at the monthly S1. Remember, euro and sterling were trading above the R1 or in and around the R1. Here you can see the total opposite, where price is now trading below or into the S1 level. So this week, if we are to see any further negativity for the US dollar, we would need to see economic data that reflects a negative US dollar and reflects a positive Swiss franc, and that would mean seeing price trading below the S1 level this week, Monday, Tuesday, Wednesday, Thursday, Friday, needing to see a daily candle continuation of the trend. So when I look down at the daily time frame, you can see the candlesticks are negative. We have a red arrow, candlesticks 20, 50 and institutional above price, which is a negative sign. RMO below the zero, which is a negative sign. The MACD is clearly below the zero level, which is a negative sign. But you'll see that prices failed to make any new lows, trading at a price support and resistance level. That was the May start support. So we need to see a bullish continuation candle. Sorry, a bearish continuation candle. Apologies. And if we do see that, then we should be looking towards the S2 level, monthly S2 level, which is below price, and that's in excess of 180 odd pips below us. There again, you're not going to get all of it, but there should be enough on the table if and when we do get a daily candle confirmational candle continuation. Failure to do so, and we don't see a continuation this week, we then see further consolidation, and then we start seeing more bullish sentiment creeping back into price, and that will then push price back up to the price support and resistance levels, or the consolidation levels that we saw at the start of May, which is around the 93325 and change level. So back up towards these levels here, in excess, or back to the 20 period moving average, which is in excess of 180 odd pips there again. So if we are seeing negativity, we want to see a continuation of that negativity in the trend. Therefore, we need to see a break of the monthly S1 level to see a continuation back towards the S2, and vice versa, back down towards the S3, etc, etc, etc. Last bit of the day is US dollar Japanese yen. Here on the weekly, you'll notice the monthly pivot levels for April were small. It's predominantly because April actually gave us an indecision candle, a very small range, a very indecisive range. Hence the reason why the algorithm on our pivot calculator has given us these pivot levels for May, which are quite close together because of that no movement consolidation that we saw the prior month. Okay, you can see the last 8 weeks, in fact, prices failed to make any new highs, and she's failed to make any new lows. And in fact, she's actually been moving within a very, very volatile range over the 2 months. Therefore, hence the reason why monthly pivots are very, very small and squeezed together. See here again on the daily, just to give you a really clear indication of that volatility over the last 2 months. In fact, you can see it's far better in this particular pair, not trading the US dollar Japanese yen for the last 2 months, because price has been stuck between 2 points, the R1 and the S1 level. Okay, so here clearly, if we are to see a continuation with long-term trend, we need to see price trading above the R1, monthly R1, which is this level here at 120.69 and change, and then target the 2015 highs at the moment, which were the March highs, which are in excess of 125 pips away. Failure to see any new highs would put more negativity or strain on the bears, or put more pressure on bears, and then we need to see the current support level here at S1 being broken, and then we could target towards the S2, which is below us. So if I was you or any trading, here again, how much risk do you want to put in your trade? Rather look at crosses, i.e. euro yen crosses, sterling yen crosses, Australian dollar yen crosses, New Zealand dollar yen crosses, CAD yen crosses. Stay away from the US dollar Japanese yen because of the volatility we're seeing on this particular pair on our daily time frames. Rather look at outside, look towards those risk averse particular positions, and see if there's any opportunities out there. At the moment now for the US dollar Japanese yen, there's far too much risk on the table, so I'm just going to stand aside, wait for a clear break above the R1, then target towards my R2, or wait for S1 to be breached and then target aggressively towards that S2 level. That's it, guys. The 4 majors are done for this week. Please look at the fundamentals, guys. There's a lot of economic data that's coming out this week. If you are in any particular trades, it's vitally important that you're aware of any data that's coming, economic data that's likely to reflect on price action movement. You don't want to be trading blind, guys. Rather see if there's any vital, important data that's going to hinder price action from moving in any one direction. If there is, rather stand aside, wait for the data to be announced, wait for the market to digest that, and then to give us a genuine bias of where she's likely moving. And then we can look to get into the trades. Apply the correct money management rules to that, stick to the basics, keep it as simple as possible, and you're bound to be a winner. I'm going to leave you with that. Hope you have a fantastic week. Until then, you guys trade serenely.